Here is a company that is selling fewer cars than it did 2 years ago. It just posted the first annual drop in revenue in its entire history as a public company. It was knocked off its throne as the world's biggest electric car maker by a company from China. And its own chief executive's politics are, measurably, driving away its customers. By every rule you were ever taught about the stock market, this company should be falling apart. And yet, millions of people are betting it is about to become one of the most valuable companies on the planet.
Why?
Because this company stopped being a car company a long time ago. It became a story, possibly the most expensive story ever told. Whether it goes up or down depends entirely on one question. Are you buying the cars or are you buying the story? This is not financial advice. This is politics in everything. Today, Tesla. Let us start with the boring, physical reality, the actual cars. Because as a car company in 2025, Tesla shrank. For the first time ever as a public company, its annual revenue fell, down around 3%, to roughly $95 billion. The number of cars it delivered dropped by more than 8%. And in the same period, the Chinese giant BYD quietly sold more fully electric vehicles than Tesla did, taking its crown as the biggest EV maker in the world. If Tesla were only a car company, this is the part of the video where the stock chart points sadly down and to the right, and we all go home. But that is not what happened. Not even close. And here's the first place politics quietly runs the whole show. For years, electric cars in America were propped up by a powerful incentive, a $7,500 federal tax credit, a gift from the government, to anyone buying one. It made the sums work for millions of buyers. Then, in September 2025, that credit expired. And the effect was brutal and immediate. Demand that had been pulled forward simply vanished. In the first quarter of 2026, Tesla's American sales fell off a cliff, part of a slide of more than a third since the credit disappeared. An entire market built substantially on a policy. And when the policy changed, the market changed with it. The government gave, and the government took away. Now, the second and far stranger way politics moves the stock. Its chief executive, Elon Musk, became one of the most openly political business figures alive. And for the first time in the modern history of the stock market, we can watch a chief executive's personal politics show up directly as a line on the balance sheet. In Europe, Tesla's new registrations collapsed by around 39% over 11 months, as consumer backlash against Musk's politics collided with cheaper rivals and organized boycotts. Think about how unusual that is. Not a product recall, not a factory fire. The brand itself became political, and a chunk of customers simply walked away. For Tesla, the CEO is no longer just running the company. He has become a core part of the risk. So, shrinking sales, a lost crown, a subsidy gone, a politically wounded brand. This stock should be a wreck. And yet it trades near the top of the entire market. To understand why, watch this single, revealing moment. In one quarter of 2026, Tesla delivered far more cars than Wall Street expected, beating forecasts by tens of thousands of vehicles. Good news, right? The stock fell around 7% anyway. Read that again. The company beat expectations on the thing it actually sells, and investors shrugged and sold. That is the tell. It is the proof in a single day of trading that almost nobody buying this stock is actually buying it for the cars. So, if not the cars, then what? The answer is the story, and it is a genuinely audacious one. Tesla's leadership has pivoted the entire pitch away from being a car maker at all. Musk announced the end of the iconic Model S and Model X and began converting factory lines toward building humanoid robots. The new vision fits in 4 words: the future is autonomous. In this telling, Tesla is not a company that sells cars. It is an artificial intelligence and robotics company that will run fleets of self-driving robotaxis and armies of humanoid robots. Those robotaxis do now exist in tiny numbers on real streets in a few American cities. The stock price is not a bet on this year's cars. It is a bet on that entire science fiction future arriving on schedule. Which means when you buy this stock, you have to ask what you are actually paying for. Consider one number: For most of this period, Tesla traded at a price-to-earnings ratio of around 200. To translate, for a normal, healthy company, you might pay 15 or 20 times its annual profit. Buyers of Tesla were paying roughly 200 times. You are not paying for what it earns today. You are paying richly for a future that mostly does not exist yet. The most bullish analysts model the stock at thousands of dollars a share and a $3 trillion company. The bears reply that at this price, any delay to the robot future could trigger a violent 30 to 40% collapse. Both are really arguing about the same thing, not profit, but faith. So, the only question anyone truly cares about, from here, does it go up or down? And once more, seriously, this is not financial advice and nobody, including us, knows. But we can lay out the forces, honestly, on both sides. On the upside, if the robot axis genuinely scale, if the humanoid robots become real products, if the energy storage business keeps booming, and if that fiercely loyal base of believers keeps holding, the story feeds itself and the stock can fly. On the downside, the core car business is shrinking, the brand is politically damaged, Chinese rivals are ferocious, the valuation is priced for perfection, and every single part of the dream depends on hitting deadlines that this company has, historically, often missed. And underneath all of it runs a strange, self-reinforcing loop, the real engine of this whole phenomenon. It works like this. Belief pushes the stock price up. A sky-high stock price lets the company raise money cheaply and keeps its superstar founder motivated and powerful. That cheap money and star power help fund the audacious future, the robots, the self-driving. And visible progress on that future creates yet more belief. Round and round it goes. As long as enough people believe, the story can literally fund itself into becoming true. But never forget, the exact same will can spin backwards. Faith can compound, and faith just as easily can crack. That is the knife edge this company lives on. So one last time, is Tesla going up or down? By now you should see why that is almost the wrong question. The honest answer is that this stock is no longer a simple claim on a company's profits. It has become something closer to a belief, a collective bet on one man's promise of tomorrow, priced to the dollar and updated by the second. Its chart is not really a measure of how many cars roll off the line. It is a live opinion poll on how much the world still trusts Elon Musk to deliver the future he keeps describing. And that means owning it is not quite investing in the old-fashioned sense. It is closer to voting. You are casting a ballot with your money for or against a version of the future. Just please know which one you are voting for. Not financial advice, but maybe the most political stock on earth. Fewer cars, a lost crown, and a $500 billion bet on a promise. Everything is political, even the stock you thought was just about electric cars. This is politics in everything. Once more, for the record, none of this is financial advice, so do your own research. If this changed how you see that ticker, subscribe and tell us in the comments. Are you buying the car or the story? Next time, a new arena, same game.